Welcome back, everyone. Today we're taking a deep dive into the gold market. It's a topic that many of you have expressed interest in, especially with gold prices hitting those record highs recently.
Absolutely. There's a lot to unpack.
To help us make sense of it all, we have a leading expert in the field joining us. Thanks for being here.
Glad to be here.
So let's jump right in. What's fueling this surge in gold prices, and what are the key things to watch out for in the week ahead?
Well, gold's been on a tear, and there are several forces at play. Global uncertainty, central banks, economic data, they all factor in.
Okay, interesting. The U.S. Federal Reserve, they've got their minutes from the last meeting coming out this Wednesday. Could you explain how that might impact gold?
Sure. So the Federal Reserve, they set interest rates, right? That's essentially the cost of borrowing money. Now, right now, the market's expecting them to maybe lower rates soon.
And that usually makes the dollar weaker.
Right. A weaker dollar typically means a higher gold price.
But I've also heard some Fed officials talking about being a little cautious about lowering rates.
Exactly, and that's why these minutes are so important. They'll give us a much clearer picture of the Fed's thinking. So yeah, the Fed's actions, they could really push gold either way.
Up or down. Makes sense. Now, inflation is another big one, and we've got reports coming out from Europe, the UK, and Japan this week.
Yeah, inflation reports, they basically tell us how fast prices are rising, and that matters a lot. If inflation stays high, central banks, they might have to raise rates, and that could push gold prices down.
But if it slows down,
then they might keep rates low, and that's generally good for gold.
Okay, so global economic data, that's obviously huge. But we've also got geopolitical tensions, like the situation in the Middle East. How does that play into the gold market?
Geopolitical risks, they always make investors nervous. And when they get nervous, they often flock to gold. Kind of a safe haven in times of trouble.
Because it holds its value.
Right? Gold's seen as a stable asset. So any escalation in the Middle East, that could definitely send investors running to gold.
And what about U.S.-China relations? It seems like their trade tensions are constantly in the headlines.
Yeah, the U.S. and China, they're key players. If things get worse between them, gold could benefit as investors seek safety. But if they manage to, hammer out a deal,
then maybe gold wouldn't look so attractive.
Exactly.
It's amazing how many different factors can impact the gold market.
Yeah.
This is shaping up to be pretty crucial in terms of where things go next.
No doubt the next few days will be telling. But let's not forget the central banks. They've been a pretty big factor in the gold market lately.
You're right. We've seen central banks around the world adding to their gold reserves. Why is that happening?
Well, think of central banks as the folks managing a country's money. What we're seeing is, especially in those developing countries, they're trying to diversify their reserves.
Diversifying me.
Yeah, so less reliance on the US dollar and more gold in the mix. Because gold, it's seen as safe, it's stable.
A good alternative to holding too many US dollars.
Exactly, and this steady buying from central banks, it's providing a lot of support for gold prices.
That makes sense. So you've got those central bank purchases sort of underpinning the market. But what about the technical side of things? Any indicators we should be watching there?
Yeah, so technical analysis, that's all about using charts and data to kind of anticipate where prices might go. And lately, gold's broken above that $2,500 an ounce mark for the first time.
Which suggests?
Could be a sign of further gains. We've got some key resistance levels up at $2,550, $2,600. Those are points where you might see selling pressure come in.
Sort of like a ceiling.
Exactly, like a ceiling. And on the flip side, we've got support levels forming down at $2,480, $2,450. That's where you might see buying pickup, preventing further decline.
Okay, so those levels, those are going to be important to watch.
Yeah, traders will be keeping a very close eye on them.
So technically speaking, it sounds like gold could continue to climb. Now, what about supply and demand? What's the latest on that front?
Well, on the supply side, you've got some of those big gold mining companies. They've been having trouble producing as much gold as they used to. Rising costs, environmental regulations, things like that.
So less gold coming out of the ground.
Right. And that limited supply, it tends to push prices higher.
Makes sense. But is there enough demand to absorb that limited supply?
We're seeing demand increase, especially from countries like India and China. And India, they've got the wedding season coming up, and that always drives demand for physical gold. Jewelry, gifts, all that.
It's interesting how cultural traditions can impact something like gold demand. We often think of it purely as a financial asset, but it's clearly more than that.
Absolutely. Gold has a cultural significance that goes way beyond just investment. And on top of that cultural demand, you've also got more investment demand. Those gold-backed ETFs, for example, they've seen strong inflows lately.
Positive inflows, meaning
More money flowing into those ETFs. It's a sign that investors are increasingly interested in gold. They see it as a way to diversify their portfolios, hedge against inflation, all that good stuff.
so it seems like there's a lot of positive sentiment surrounding gold right now. Are analysts changing their forecasts because of that?
Analysts, they're always trying to predict what's going to happen next. And yeah, a lot of them are actually raising their price targets for gold. Goldman Sachs, for instance, they just upped their 12-month target to $2,700.
Wow, that's quite a jump.
They're betting on that persistent inflation and the strong central bank buying to keep pushing prices higher. Other institutions, they're maybe a bit more cautious, but still, the overall sentiment is pretty bullish.
So it looks like there's a lot pointing to further gains for gold, but I know a strong U.S. dollar can sometimes put a damper on things. What's the outlook there?
The US dollar, it's been surprisingly strong lately, even with those expectations of the Fed cutting rates.
So that's been holding gold back a little.
To some extent, yeah. But in other currencies like the euro, the yen, gold's actually been doing even better.
So those currencies, they're going to be something to watch this week.
Definitely, they could have a big impact.
Now, even with all these positive signs, are there any risks to be aware of when it comes to gold?
Well, with any investment, there are always risks. One thing to consider is, what if the US economy is stronger than expected?
And if the economy's doing well?
The Fed might hold off on those rate cuts, the dollar could strengthen, and that could hurt gold.
So a strong economy, while generally a good thing, could actually be bad news for gold in the short term. Anything else to keep in mind?
Well, gold has gone up quite a bit recently, so there's always a chance that some investors might decide to cash in, lock in their profits.
Which could trigger a sell-off.
Right, and that could lead to a pullback in prices.
So we need to be mindful of that possibility. What else could potentially send gold prices lower?
Another thing to consider is, what if those geopolitical tensions ease?
And if the world calms down a bit?
Well, gold often does well when things are uncertain. If that uncertainty fades, demand for gold as a safe haven might drop, and that could bring prices down.
So an improvement in global stability, while obviously positive, could actually be negative for gold.
Exactly. It's all about context.
Now, shifting gears a little bit, what are the experts saying about how to actually invest in gold right now, given all these dynamics we've been discussing?
That's a great question. There are definitely a lot of things to consider.
With so many factors at play, what's the best way to approach it?
Well, there are a few different approaches. One popular one is what's called buying on dips. Basically, you wait for a price drop, a temporary one, and then you buy.
So kind of a patient approach, not chasing those rising prices.
Exactly. Another approach is to use options.
Options?
Yeah, those contracts that give you the right to buy or sell gold at a certain price down the road. It can be a way to potentially amplify your gains, but it also comes with more risk.
More risk, yeah. And then some experts, they talk about diversifying beyond just gold, right?
Yeah, right. Spreading your bets across other precious metals, silver, platinum, palladium, things like that. Some people even think silver could outperform gold in certain scenarios.
So it's about spreading that risk around, not putting all your eggs in one basket.
Exactly. Finding that balance that works for you, your risk tolerance, your goals, all that. Another pretty common strategy is to combine those mining stocks with physical gold or gold ETFs.
Mining stocks meaning?
Shares of companies that actually mine gold.
So you're getting direct exposure to gold through the physical stuff, or ETFs,
right,
and then indirect exposure through the companies that produce it.
Right, and that can potentially offer both growth and diversification.
Interesting. It's clear there's a lot to consider when it comes to gold. This has been a really insightful conversation. So to kind of recap, we've talked about all those factors that can influence the gold market. The economic indicators, the central banks, geopolitical stuff, supply and demand.
We've touched on some of those risks too, like a stronger than expected U.S. economy or maybe a sudden easing of tensions around the world. And then, of course, all those different investment strategies. Gradual buying, using options, diversifying into other metals, finding that balance between mining stocks and the actual gold.
It's given us a really comprehensive view of the gold landscape. Before we wrap up, I'd love to get your final thoughts. What are the key takeaways you'd want our listeners to keep in mind as they navigate this complex market?
Well, I think it's important to remember that gold, it's driven by some pretty powerful forces right now. Those persistent inflation worries, the ongoing geopolitical risk, and then you've got those central banks that are continuing to scoop up gold. All of that points to a pretty supportive environment for gold prices.
So fundamentally, it sounds like the outlook is pretty positive.
It is, but as we've talked about, there are those risks to consider too. How the US economy performs, what happens with those global tensions, and then that possibility of investors taking profits off the table. Those things could all impact gold prices.
So staying informed is key.
Absolutely. This isn't a market where you can just set it and forget it. You really need to stay on top of those economic reports, geopolitical developments, technical signals, all of it. It's about being adaptable, making informed decisions.
Great advice. This has been incredibly valuable. Thanks so much for sharing your expertise. And to our listeners, as you think about your own financial goals, consider this. How might gold's role as that safe haven asset evolve in the years ahead, given all the uncertainty in the world? And what does that mean for you as you consider your investment strategy? It sounds like gold has a lot going for it, but like you said, it's not for everyone, it's not risk-free, and investors need to carefully weigh those risks against their own goals.
Absolutely. Gold's not a magic bullet. You really have to consider your own situation, your risk tolerance, all of that before jumping in. Talking to a financial advisor is never a bad idea either.
Good advice. Well, this has been an incredibly insightful deep dive into the world of gold. Thank you so much for sharing your expertise with us.
It's been my pleasure.
And to our listeners, we hope this discussion helps you make more informed decisions as you navigate the financial markets.